This video is going to cover the terminology and lingo associated with setting up wholesale accounts, shipping wholesale products to you, and purchasing wholesale products, as well as the different types of wholesalers you're going to encounter when you're setting up accounts. These are the types of wholesalers you might encounter whenever you're starting your wholesale business. General wholesalers generally sell a variety of products at reduced prices. Now, many of these are going to focus on closeout products. So the place you're going to see a lot of these types of sellers are at wholesale shows like ASD. Now, they're going to carry lots of different products across many lines. They're going to generally have good prices based on their closeouts, but in terms of replenishable products, these wholesalers typically aren't able to supply you with as many replenishable products as a distributor or manufacturer. Now, a distributor is a term that's used very widely, and you're going to see it used in many different cases. But the basis of a distributor is that they're going to ship or sell imprint products from a variety of manufacturers for wholesale pricing, which is a price less than MSRP. However, they're not going to be typically as cheap as purchasing directly from the manufacturer themselves, but they're definitely a viable part of your supply chain. Now, we typically try to focus on manufacturers, and there's several uses for this term as well. In some instances, you're going to mean the manufacturer of the physical product, like the warehouse in China or whatever. In most instances, we're not going to be talking about that. We're instead referring specifically to the company who owns the brand and rights to the product. Most of the time, we're going to try to purchase directly from that particular terminology. And when we say manufacturer, that's generally what we're going to be referring to. Now, when you start to set up your wholesale business, different wholesalers are going to require different sets of information to verify that you are a real business. Wholesalers typically want to be dealing with businesses because they deal in a larger volume. So one of the things they're going to ask you about is your FEIN or your EIN, which is a Federal Employer Identification Number. Now, this is a number given to you by the IRS, and it's your federal number. So that's one of the things you're going to have to set up. After this slide, we're going to show you an example of what ours looks like. Another thing they might ask for is a resale certificate. Now, this is different than federal because it is issued by the state, but it shows that you are a retailer within that state. Now, some will ask for a business license. Now, business licenses are issued by your city or county to show your business has a residence and a license to operate. Now, generally when they're asking for a business license, they have a requirement to sell to brick and mortar stores, so keep that in mind. Another thing they might ask you for is trade references. Now, trade references are evidence of companies you've dealt with in the past. Typically, what you're going to give them is your account number if you have one, your rep's contact information, or anything else that might have them be able to contact that company and say. They're generally going to ask, how long you've had an account, typically, do you have any lines of credit, etc. Bank references are, it's a reference from the bank that you do business with. They may be looking to see average account balances, lines of credit, or various other information. Typically, whenever they're asking for bank references, what they're really looking for is if you're setting up a credit account with them, or one where they're going to extend you a line of credit. Basically, they're trying to make sure that you have enough money to pay for your purchases and won't rip them off. Now, some businesses will ask for a W-9. Basically they're asking for your EIN. They're just wanting it in a more formal format, similar to the form you would give to the IRS. And it's basically just a way to verify your company's information, address, and EIN. Now, in terms of all of these forms, we're going to be able to show you them after the slides. We're basically going to be able to show you a PDF of the various forms that we have for our business with the information blurred out, of course. But it'll show you what these forms look like. And feel free to comment in the Facebook forums if you need to know how to get them. We're more than happy to direct you in a path that would let you get this information so you can start setting up accounts. Now, these are the types of payment terms that you're going to encounter with your wholesale business. Some wholesalers are going to accept simple credit card payment, and others are going to require a company credit card. Now, this is simply a credit card in your company's name. It'll still have you or the president of your company on the card, but it's going to say your company's name on the card. Now, some wholesalers are going to accept terms. This is a designated pay length or a grace period for the amount of time you can take to pay a particular bill. For example, you're going to see this designated something like net 14 or net 30. What that means is you would have to pay the balance within 14 days or within 30 days. The most typical periods are net 10 and net 30. Now, some companies are going to extend lines of credit. This is a credit to your company by the wholesaler. Most companies, when setting up net terms, will establish a maximum credit you can be afforded during your net period. This credit can range from $500 to even millions of dollars, depending on your business. For example, we have one wholesaler who offers us $60,000 over net 30 to net 90 terms, dependent on our invoices. Another term you're going to encounter is pro forma. What it is it's typically referring to a pro forma invoice or a statement of commitment from the seller to sell goods to a buyer at a specified price and terms. This is generally used to declare the value of a trade. And then you might encounter escrow, which is a third-party transaction in which the third party holds the cash or funds until the deal has been completed by the other side. We've never actually had this come up, and it's generally reserved for extremely large deals, but hopefully at some point you may have the opportunity to encounter it. This is some of the pricing and ordering terminology you're going to encounter with your wholesalers. Some are going to have a minimum order quantity or MOQ. Now, minimum order quantity is a term used to denote the fewest amount of pieces or dollars you will have to order of a specific product. Most companies set this line in dollars. However, we've seen companies who require a specific volume of cases or individual units. Now, MOQs are typically going to range. A lot of the MOQs we deal with are typically around $500 to $1,000, and then some are upwards of $5,000. But it's it's going to vary based on the types of products you're buying, as well as which part of the supply chain you're getting it from. Another term you might see is keystone. This is a term that designates 50% of MSRP as a wholesale value. And for most intents and purposes, it's typically going to be the standard margin you're going to see from a wholesaler. Then you may see points. This is a term used to designate the percentage of a markdown. For example, if someone is giving you keystone pricing, they would be giving you 50 points. Basically, that is the percentage that they're marking off of MSRP. And then another term you're going to encounter, and this one comes up quite often, is case pack. You may see the term inner, outer, master. This is used to designate the amount of units that come in a particular case. For all intents and purposes, outer and master are pretty much interchangeable. Most case packs come with some number of inner cases housed in an outer case or a master case. So if purchasing a master case, you might be buying 12 units per case with eight inner cases to one master case. So if you ordered one master case, you would be getting 96 units. In most cases, the wholesaler is going to tell you this and simply reward you for purchasing at a higher volume on the master case level. But it's important to ask if you see a particularly high case volume. So if you see something like 96 units per case, you might want to ask if you can order in inner cases, or if that is simply the only case form it comes in. It may be able to reduce your overall MOQ, so to speak, or the amount of units you're trying to buy. This is shipping terminology you will encounter with your wholesaler. Freight is generally a term that's used to characterize beyond the parcel volume. Most people refer to freight as FTL or LTL, in which a pallet or more is being shipped. Now, a pallet is a shipping device used for easy load and unloading with a forklift or pallet jack. For most shipments, they're 48 by 40 with a height of 72 to 84 inches. Most of the pallets we receive are between 72 and 84, but the pallets we ship to Amazon are 70 or less inches. 70 inches is the maximum height. So now if you're receiving pallet shipments and you do not have a pallet jack, they do allot you a time to unload your pallet, and generally they're going to help you do it. Also, you can request something called a lift gate, which you can buy a pallet truck from Uline for around $200 to $250. And with a lift gate, what they're going to be able to do is they're going to be able to maneuver the pallet down to you, and then you can use your pallet jack to take it on into your building without stripping the pallet as it stands on the truck. So receiving pallets is certainly not as intimidating as it sounds. Then receiving LTLs. Now LTLs, like I said, this is just means a pallet or more. Anything less than a full truckload is generally characterized as LTL. However, and a full truckload is 26 pallets. But we've actually received full truckloads before with around 20 pallets. So that's on the we have more on the next slide with shipping terminology. So FTL is a full truckload shipment, and as mentioned, this is usually around 26 pallets, but can be less. We've received them, like I said, with 20 to 22 pallets. With an FTL, basically you're renting the truck, and they're going to have no other drop-offs or pickups on the route to deliver your product. Now, a parcel shipment is what you're shipping generally when you're shipping through UPS or FedEx or DHL or whatever, maybe USPS. And this is just to denote that it's less than a pallet shipment. Ocean and air freight. Now this is typically reserved for overseas freight, and is simply a detail as to how the product's being shipped by air or by ocean. Now it's important to know whenever you're shipping from overseas, if you're shipping by air, you can ship actually parcel, and or you can you can ship an air pallet. With ocean, you can typically do partial containers. But now with ocean and air freight, it's important to go ahead and tell you that there's a lot of other stuff you can encounter with tax codes and imports and import duties and things like that. And we suggest if you're planning on getting stuff from out of the country, that you probably do it through a broker or a freight forwarder. And we're going to be able to give you a list of freight forwarders that we've used or know of that have pretty good reputation as far as importing product. Now these are product specific terms that you're definitely going to see at some point. MAP is minimum advertised pricing, though in super rare cases, I've personally only seen this once. It's used as a maximum advertised price. Like I said, I guess maybe twice, but it's very rare. You almost never see it. But it's very common to encounter the minimum advertised price. Now what they're typically going to do is say, this product has a retail price of $19.99, but our minimum advertised pricing is 10% less than our MSRP, or $18. So, and if you encounter these types of products, you're going to on Amazon, you're generally going to see it selling for MAP pricing, which is as low as people can get away with without breaking the rules. Then you're going to see something occasionally called authorized sellers. Now, it's good to tell the companies you're dealing with, make them informed of who you are and what you do, because they're going to create lists of authorized sellers for their products, and then they're generally going to use this to report unauthorized product if you're selling it on Amazon or through any other means. So it's good that they know who you are and want to deal with you. That's one of the things we're going to preach in the course, is be upfront about who you are and what you're doing. It's going to save you a lot of heartache and headaches in the long run. And then we've already mentioned this, MSRP, or manufacturer suggested retail price, is simply going to be the price that they suggest you sell the product for. Now, bear in mind that this This price is typically not seen that much on Amazon. People like to get below the MSRP value, but what it is important for is that's generally how they calculate their discounts when they're selling to you. So if they're selling to you at Keystone, that's going to be 50% of this value, which is the most common discount. Now, there's quite a few, there's going to be a ton of product specific terms you're going to encounter, but this hopefully is going to be, a good portion of them. And if you encounter other ones, you can definitely bring them up in the Facebook forums, and we're more than happy to answer them. But closeout and liquidation, these are typically going to be used for, a closeout's typically for a product that's being discontinued or no longer being manufactured. Then liquidations can be done for a variety of reasons: overprinting, canceled orders, excess inventory. Both of these terms are going to be used on heavily discounted products. So they're definitely going to provide you with with opportunities. So just be on the lookout for items that provide you with additional margin. Then, like I said, you're going to see the term discontinued. It's going to be given to a product that's no longer being printed or manufactured. But what typically happens is they're going to manufacture a similar product with updated packaging or something like that, and it will end up replacing the discontinued item. And then stockouts and back orders. Now, this is going to be used by the manufacturer when they're currently out of stock of an item, and the products will be restocked at a later date. Now, what's important to note about this is generally what happens is you're going to place your order, and any items that are on back order will just ship at a later date. Now, you have to bear in mind what you have on back order. Also, whenever you're looking at a product, if a product's on back order when you're ordering it for the first time, you may want to reconsider or do some more research on Camel to make sure the price is stable. Because what happens is when a product sells out, it's going to go up in value. And when it comes back into stock, there's going to be more sellers, and the price typically gets driven down a little bit. We've encountered this a few times, but typically we try to do enough research to realize that what's going on. But back orders and stockouts are common with manufacturers. Now, one thing you can typically request with most is to say, don't ship back order items or cancel back orders. And what that's going to do is it's going to keep your orders significantly more clean and effective as far as moving forward with your orders. You're going to know what's being shipped and not have to keep an active list of your back orders. Now, we used to definitely do that, but typically now, like I said, if it's an item that we actively carry, we generally understand the sell-through rates and things like that involved, so we're just basing our order off what we've sold and what we expect the product to do in the future going forward. But with back orders, just take a little extra time and figure out what's going on with the product to make sure you're not going to get burned when it comes back into stock and lots of sellers start picking it up. Now, I understand that these slides were kind of tedious. Anytime you're getting word lists, it's going to be more tedious. But these are definitely some of the terms you're going to encounter. Like I said, it's not completely comprehensive because people use different terms all the time. It's going to vary some from manufacturer to manufacturer, but these are definitely terms that you will encounter. So should you encounter something you don't understand, feel free to pop into the forums and ask about it. And if or ask your rep. That's what they're there for. But ultimately, knowing these terms in advance will definitely help you out a lot. Like I said, particularly with back orders, that's a term that you're going to encounter fairly often with replenishable goods. Just know where you're at and know where the product stands. In this video, we will be going over the type of profit margins you can expect in a wholesale-based business. Profit margins will generally be lower than you might encounter in a retail or online arbitrage-based business, but you make up for those differences in profit margin by selling much larger volumes of products very quickly. You really have to understand that you increase volume, decrease acquisition cost, and decrease associated processing costs by a large margin. However, where the margins are thinner, it is a good idea to have a fundamental understanding of your numbers, which is the purpose of this video. This video has some extremely complex material, so it is advised that you watch it many times and work through examples and ask questions. This is not something that we understood the first time we tried it. In fact, many concepts are still hard to understand. However, working towards this will help you understand your numbers incredibly well and will serve as an invaluable tool in making better decisions. Whenever we make these calculations, we're using the function cost of product plus processing cost, not inclusive of labor, plus shipping to us. At this point, we are not examining labor as factoring into your direct product cost, which will cause you to pay additional taxes for carried inventory. The same is true for shipping to Amazon. We treat these as expenses which are discerned differently for tax purposes. This is certainly not suggestive that we do not monitor these expenses. We have developed a baseline expense per project by measuring labor over the course of processing all units and dividing for an average. If an associated expense, labor, or shipping to Amazon is inordinately high, this will be factored into our final calculations and may make the product one that we do not carry in the future. We place small test orders to measure the effects and potential unknown expenditures associated with carrying an item. Net profit margin is a ratio of profitability calculated as a net income divided by revenues. Functionally written, net profit margin equals net profit divided by revenue. Profit margin is a term that is often thrown around, but in reality simply gauges a company's risk of loss on an investment. The higher your profit margin, the less risk of loss you have on a product. Profit margin is generally a value that is most correctly used in a holistic context to determine inventory health across a full range of inventory or division of inventory. Profit margin is often confused with the term ROI. ROI is designed to be ran at the SKU level or individual product level and is a gauge of comparison designed to help you allocate funds to determine where you should designate money and resources. Look at this from the perspective of a numerical value designed to look at your inventory as an apples-to-apples comparison. This is a performance measure used to evaluate the efficiency of a number of different investments. Looking at and understanding this function will help you understand your products in terms of gains. This can be used to evaluate products in comparison to one another and help you decide where your money should be spent. The higher your ROI, the more priority it should receive within your product purchasing. It is very important to remember that ROI is a metric that is designed to look at on a per period basis. That means that a true understanding of this number, you should be looking at it through a period or cycle, which may allow for compounding to take place, aka turn rate. Think of this as profit percentage versus your cost of acquisition value. Inventory turnover rate equals cost of goods sold divided by your average inventory. Now, to find out your average inventory, simply divide your beginning inventory plus your ending inventory by 2. Now, to figure out the days to turn, we would simply use our period or days divided by our inventory turnover ratio. Let's look at an example. For this example, we're going to say that the widget costs $10, the widget's retail on Amazon is $18, and the widget's return after fees is $12.53. So for a profit margin calculation, what we're going to do is net profit, $2.53, divided by revenue, $18. The revenue is the sale price on Amazon, which will equal your profit margin of 14.05%. Now, you will see how this will differ from ROI. Your gain from the investment, $12.53, minus your cost of investment, $10. Divided by the cost of the investment, $10, is your ROI of 25.3%. Another way to calculate ROI is simply use profit divided by cost. That will give you the ROI for an individual item. The reason that the formula above is used is that ROI is made to be examined from a period of time rather than a singular snapshot for a single item sale. Here is the effect that turnover can have on your inventory. For this example, we will assume the following: 150 units in sales per month over the course of 1 year from the widget in the previous slide. Beginning inventory, $1,500.
plus ending inventory $1,500. That's saying that we were able to keep consistently 1 month's worth of inventory in stock. And divided by 2 is your average inventory of $1,500. Now, bear in mind that this is assuming perfect inventory, which really never happens. So your numbers may end up being a little different than this. But for example's sake, we're going to use perfect inventory. Then you have your cost of goods sold, $18,000, divided by your average inventory, which is $1,200, equals your inventory turnover, which is 12 months. So that's saying that we were able to sell through our entire inventory once per month, 12 times during that year. So 365 days divided by our inventory turnover, 12, meant our average days to turn was 30.416, which is almost a perfect inventory. It is important to note that this is looking at the product cyclically rather than on a per item basis. That means we are examining our purchase as a whole. Now let's plug in the remaining information to see what this product did to our bottom line. Our total monthly investment, $1,500. Our total monthly net return, $1,879. Our total monthly net profit, $379.50. And our total yearly net profit is $4,554. This item by itself is rather unappealing. However, if you are able to maintain consistent sales and profits, you can see what having a stable of these items can do for your bottom line at the end of the year. For example, if you could maintain 25 items that function like this throughout the year, which is incredibly easy to do with wholesale, you would make a net profit of $113,850 per year. Many of the items you're going to find are much better than this example. So this simply serves to show you what is capable at the very base. When making the determination on whether to carry a product or not, we believe that the absolute minimum profit margin is 15%. Again, we do not believe you should carry products with a return of less than 15%. If you are carrying items in this particular range, you should use extreme caution and be looking for ways to increase your margin. We carry a few items that function like this. However, these products are incredibly consistent, i.e. have mapped pricing, and have very high turnover, which makes them very liquid in the instance that the landscape changed for us. Now for some tips on increasing your profit margins. You may want to take notes on this, as it will be extremely important to apply these tips on content that we explore later on in this course. Look for dimensionally efficient items, which simply means small items that you can fit a lot of into a box and are cheap to ship. Look for items with minimal prep and processing costs, like bagging, bubble wrapping, boxing, etc. Purchase test orders to avoid unforeseen prep costs. When speaking with vendors, ask about free shipping thresholds or volume discounts. If there are no volume discounts, ask about further discounting for established accounts. If they do have this, that will tell you your profit margin over time will increase with this particular vendor. Look for multi-pack opportunities to help balance your profit margin, even if they are slower sellers. You aren't always looking at the profit for a single item, you're looking at the profit for an entire purchase. Another way to increase your profit margin is simply by reducing your shipping costs to Amazon. You can do this by making sure your shipments are 1,100 pounds or even using multi-pallet shipments. Generally, 3 or more pallets have a significantly reduced cost. With these methods, you can expect to reduce your shipping costs from 27 plus cents per pound to 17 to 22 cents per pound at 1,100 pounds parcel, and even as low as 8 to 10 cents per pound on the highest ends of pallet shipments. This may not seem like a lot, but it can save you anywhere from $50 to $500 depending on the size of your order. Avoid paying Amazon storage fees by not having product at their warehouse longer than 30 days. It is important to remember with these tips, because of the volume of your sales, incremental advantages add up and become exponential over time. Make sure to check out a demonstration of the FBA calculator widget in the tools video section of the course. This is a web tool that helps you get a broad calculation of a product's profit margin with just the click of a button.
Hey guys, Dylan here. I just wanted to cover a few quick things before we get started with the course. You'll notice in the course video glossary that the modules are broken down into categories. Our live webinars will be covering each of these categories in specific, going very in-depth on the topics while answering your questions. When viewing the modules, make sure and check for accompanying PDF documents directly under the video player. Many modules that weren't live recordings also contain a transcript. Be aware that the modules are intended to be viewed in order, so we don't suggest skipping around in your first viewing of the modules. We didn't make a video for it, but your first piece of pre-course content is to start the process of obtaining your resale certificate, if you have not already done so. If you have questions about this, you can ask them in our Facebook group. That brings us to the next couple videos that make up the rest of our pre-course content. I want to warn you, they are a bit tedious and boring. One is definitions that you must know for wholesale, and the other involves math. But the fun stuff starts right after that as we start to get into sourcing. Alright, I'll let you get to it. Good luck, and if you have any questions at all about any of the content, make sure and post it in the Facebook group.
Here we will be discussing the different types of wholesale product opportunities, but in this video and throughout the entire course, we will be focusing on one type specifically: replenishable wholesale products. We believe replenishable wholesale products are the foundation to creating a successful, predictable, and sustainable wholesale business. About 90% of our own sales come from these types of products, so we have a lot of experience with the subject. And it's what we will be teaching you how to utilize in building your own wholesale-based business. So what are replenishable wholesale products? They are products that are available for purchase from a vendor that you will be able to consistently reorder or replenish as you sell through your inventory. So for clarity, the term replenishable just means your ability to reorder the product from a vendor. It has nothing to do with what kind of product it is, specifically such as reusable products. We will sell any kind of profitable item, from consumables to clothing to toys. It doesn't matter, so long as we can make money with the product. So let's look at a major benefit of replenishable wholesale products. They are the most predictable type of wholesale product. Once you negotiate a price with a vendor, you can easily chart out your profit margin and sales estimates. Other types of wholesale product opportunities, which we will discuss later in this video, are slightly less predictable and have a lot more volatility. Now let's go over an extremely important tip for selling replenishable wholesale products. If the product you are selling is a good product and your intention is to keep selling said product, you do not want to ever let it go out of stock. Being out of stock on a profitable product is simply throwing money away. You need to plan accordingly and make sure there are no lapses in your inventory. When you start to get a very good daily sales estimate, it becomes easier to schedule new orders of a product. There are also tools that help with this, and we'll cover those in this course. We typically like to purchase about a month's supply at the very minimum, so that we can easily maintain a healthy stock. Oftentimes, we will purchase 3 months of product or more, as many vendors have price breaks available at certain quantities ordered. Keep in mind that we do not ship in the entirety of our ordered product to Amazon at once when we make larger orders. We will send in roughly a month's quantity and store the rest at our warehouse. This is to avoid Amazon storage fees that are associated with FBA. Products that you ship to Amazon have a 30-day grace period where you're not charged any inventory fees upon arrival to the fulfillment center. If you sell those products within 30 days, you are never charged a storage fee. You want to always be calculating how much of a product you are selling in a given month and staggering your shipments into Amazon based on that volume to avoid these unnecessary storage fees. When you start engaging in wholesale opportunities, you may not have the available capital to make larger orders, where you need to worry about having more than 30 days of inventory. But as your business grows, it will become an invaluable tool in avoiding unnecessary costs. As I discussed, this course will focus primarily on replenishable products, but I did want to present you with the other kinds of opportunities that you may encounter. First, you have closeouts, which are products that are no longer in print and may have been discontinued. Then you have liquidation opportunities, which is excess products sold at a significantly reduced price, often temporarily. And then you may have promotions, which is a product that will be available for a short period of time, but may be unavailable to be reordered or replenished, or when a product is sold at a steep discount, but only for a short period of time. You can see that all of these types are similar and that they're much harder to predict and plan than replenishable wholesale products. While we're not completely adverse into taking advantage of opportunities like this, it's not something that we base our business on. The goal is to find a consistent base of products that you can sell over and over again for a long period of time, at which point it almost becomes a passive source of income, and you can focus on growing your business larger and larger simply by adding new products. As we prepare to dive into our direct sourcing methods that tie all the different factors we have been covering in the course, it is very important to understand the concept of reverse sourcing, which is the foundation of those methods. It is likely that you have been taught in the past that you should be seeking out wholesalers first and then going through their catalogs and web pages of inventory to find products. We think that this is objectively the wrong way to source. Going through a wholesaler's inventory can be very tedious and time-consuming and doesn't guarantee that you'll find any worthwhile products. Finding wholesalers first can also lead to problems where you're actually working with middlemen. It saves you money to avoid these middlemen. You want to be buying product as high up on the supply chain as possible. You want to be purchasing directly from the manufacturer. That leads us to reverse sourcing, which is the method of finding a great product, first using our set of criteria, and then contacting the manufacturer directly to purchase that specific product. This saves you countless hours, takes out guesswork, and in the end, you get the product you wanted at the best possible price. Another huge benefit of reverse sourcing is that you are actually developing a relationship with the manufacturer and brand owners, not some random wholesaler or middleman. If you foster these relationships, they can lead to some amazing perks. Here are just a few of our personal examples. We have several manufacturers that alert us when they're going to sell to Amazon and the number of units that they will sell to them and what they're going to charge them. We have multiple manufacturers where we get the lowest possible price of anyone they sell to. Many companies will contact us first when they're going to have specials, closeout opportunities, or other things to see if we are interested. We have signed Amazon exclusivity deals with companies. You see, all these benefits came about just because we talk to manufacturers like they're human beings, and they like us for it. We connect with them on a personal level, and we recommend that you try and do the same.
One of the most important components to any successful Amazon business is understanding how to win the buy box on products you are selling. So let's go over what exactly the buy box is and how it works. The name buy box is pretty literal. As you can see in the picture, it is the area on a product detail page where a customer actually clicks to add a product to their cart. So the question is, if there are multiple sellers on a given product, who gets the sale when a customer clicks add to cart using the buy box? The answer is that Amazon automatically selects the seller using a set of metrics that for the most part they try to keep a secret. Fortunately, we have figured out most of those metrics and will be sharing them with you in a bit. First, let's look at the other areas we have highlighted here. Check out buy box price. When you search up a product, before you ever click add to cart, Amazon has already selected the seller that is in control of the buy box, and it is that seller's price that will be displayed on the product detail page. Now let's look at the other sellers area that I have highlighted. This box shows a few of the other sellers for the product that do not currently have control of the buy box. You can see that it lists their price and shipping costs, along with an add to cart button for each of those individual sellers that do not currently have the buy box. But that is still not all the sellers for the product. At the bottom of that other seller's box is an option to select 9 from $2.36. That will show you the rest of the sellers. That option is also located here under the key product features. Now for a few more questions and answers. Why is the buy box so important? Well, 82% of all sales on Amazon go through the buy box. That is somewhere right around $100 billion. So in a nutshell, you aren't likely to sell a product unless you control the buy box. What is the purpose of the buy box? Why doesn't Amazon just make you pick from a list of sellers every time you make a purchase? Well, 2 reasons. Number 1, convenience. Automatically selecting the seller streamlines the buying process for the customer and makes the overall buying experience easier. Secondly, and this is important for understanding how the buy box chooses a seller, is that the buy box is set up to use an algorithm that tries to give the customer the best possible value. We have covered what the buy box is, how it works, and why it is so important. Now take a look at how it selects a seller. In the following list, we have ranked what we believe to be the biggest factors for winning the buy box in order of importance. Let's talk about the top 4 factors in order. Fulfillment method. This one is pretty simple. Amazon gives buy box priority to sellers that use the FBA system. If you are merchant fulfilled, you're going to have a bad time. As a wholesaler, you will want to be using Fulfillment by Amazon, period. Landed price. There are a lot of different variables that make up this factor, but the most important is that your product price and shipping price combined is the lowest amongst all sellers. Another variable that makes up the landed price is the distance that your product has to travel to get to the customer. That particular variable is almost impossible to control, but keep in mind that it is part of the calculation. Seller rating. That one is a bit self-explanatory, but there's a lot of weight on both your number of ratings and overall score. You really want to strive for 98% or above. For the rest of the factors, you can see we have another chart here that actually lists the optimal status for each given factor. We have all these charts as downloadable files below the video as well, so make sure to save that for your notes. And here are the bare minimum requirements you need to meet for each factor if you want to be routinely getting the buy box. Again, make sure to download these charts at the link below the video.
Sales rank is the top factor we take into account when sourcing products. It is sometimes referred to as Amazon Best Sellers Rank. Unlike in retail and online arbitrage business models, sales rank is not particularly difficult or complicated because we only consider products with really high sales volumes. The more often an item sells, the lower its sales rank, and while it is true that sales rank can vary quite a bit from day to day, for items with higher sales ranks, it takes a large volume of sales maintained over time to achieve a very low sales rank. Therefore, the products that we target with low sales ranks can be relied upon to be an accurate gauge on the product sell-through. Take notes and do your best to understand the points that we cover in this video. You likely already know this, but just for completeness sake, let's go over how to find a product's sales rank. It can be found on an item's listing about 3/4 of the way down the page under the product details, as you can see in this slide. Sales rank is a numerical value given to a product by Amazon that indicates how many and how often a product sells in its primary category. It is a linear ranking system where a lower number means more sales. So a product with a sales rank of 1 would be the best selling product in its main category. A product with a sales rank of 2,000 would be the 2,000th best selling product and would sell more units than a product with a 4,000 sales rank, and so on and so forth. Products are assigned their ranks within their main category. You will also find that products are ranked for their subcategories. For all intents and purposes, you should ignore sales rank for subcategories. This is important.
We only care about a product's rank in its main category. The reason for this is there are many weak subcategories on Amazon where a product can rank number 1 in them and may only sell 2 to 3 times a month. In this example, you can see that this product is ranked number 82 in the subcategory of playmats, which sounds pretty good. But you can see that its sales rank in the main category of toys and games is over 100,000, which is terrible. Now, there are many niche subcategories on Amazon, so be sure to disregard a product's rank as it relates to its subcategories and only focus on the main category ranks. Sales rank is dynamic and changes throughout the day, even hour to hour. Realistically though, the products you should be targeting for wholesale will have low sales ranks and therefore historical proof that the product has had sustained demand for an extended period of time. The only time a red flag goes up for me when deciding to purchase a product that has a low sales rank is if it has a low number of reviews. In this case, I would try to make a smaller test order of the product and maintain a close eye on it. Otherwise, I would have full confidence that a product with a low sales rank would have a reliably high sales volume. The most important factor when assessing sales rank is that sales ranks can vary drastically from category to category. A sales rank of 1,000 in the baby category is very, very different than the sales rank of 1,000 in the health and personal care category. So be aware that sales rank figures do not translate across categories in terms of number of sales. These are made up numbers, but I will give you an example. A 1,000 rank in baby might mean that it sells 15 units per day, while a 1,000 rank in health and personal care could mean up to 100 units per day. Now we will go over how we use sales rank to help us sourcing products. As we do, keep in mind that sales rank is just one piece of the puzzle when we are sourcing products, along with factors such as competition analysis. Our business model is designed to move a high volume of products at lower margins, and we generally look for items that rank very well and sell fast. Our goal is for a product to sell an average of 3 times per day minimum. So what do we consider a product that ranks highly? You may have been taught by others in the past to target the top 1%. We believe you should set your heights even higher and search for better ranks, such as in the top 1/4%. Now, this isn't a rule. There are plenty of bad products in this range and plenty of good ones outside of it. We personally sell lots of products outside of this range, but that is because we know how to determine what is a good product and what isn't, regardless of its sales rank. As you become more comfortable and gain experience with wholesale, you too will be able to analyze products more holistically to fully maximize your wholesale business. The reason we believe that looking around the top range is a good idea at first is because there is little risk involved. The better a product sells, the less effect competition will have on you hitting your goal of selling 3 units per day. Here's a logical tip we can make from that. The better a product ranks, there can be a relatively higher number of sellers on it, and you can still meet your goals. The worse a product ranks, there needs to be fewer sellers for you to reach your goal. We will delve deeper into this concept in the competition analysis video. This chart we have compiled demonstrates the sales rank ranges you should try and target to achieve the goal of 3 sales per day minimum. The number displayed for each category is the approximate maximum sales rank for a product to sell 90 times total among all sellers each month. This chart serves as only a guide. You should never make a product sourcing decision based on the rules of rank alone. You need to take into account all 5 of our factors that we teach throughout the wholesale formula, specifically competition analysis, which we'll be covering in the next video. This chart is also attached below in PDF form, so make sure to download it and print it out. Getting started in wholesale with low-ranking products affords experience while minimizing your risk. At some point in acquisitions, you will be able to clearly identify an opportunity that may not be by the numbers as laid out in this video, but having started with the fundamental techniques of this module, the experience garnered will allow you to capitalize where others may not.
This video covers the most critical factor combined with sales rank that we take into account when sourcing products, and that is analyzing the competition also known as the other people selling the product that you want to sell. There are several ways competition on a product will directly influence the amount of said product you can expect to sell. The first and most important is pretty simple. More competition equals fewer sales. Each product is essentially a pie, with a pie representing the total sales expectancy for the product, and each seller that is in contention for the buy box gets a piece of the pie. Oftentimes, a product will have a large number of offers, but only a handful of them are considered in contention for the buy box, and thus your only true competition. We will show you how to properly identify and separate the two. Sellers that aggressively reprice products are another factor that can affect sales. These are typically mega sellers that habitually beat the price down on products to the point that margins become slim or non-existent, as their focus is entirely cash flow based. If the product you are considering has a seller with a massive amount of feedback and is currently beating the price of all other offers, it is a good idea to check other items carried by that seller to see if that type of pricing pattern appears across their entire inventory. If it does, they are what we would consider an aggressive repricing mega seller, and you want to avoid these type of sellers when possible. Another key note is to avoid products that are sold by Amazon themselves. It is very difficult to compete head-to-head with them. Before we get to examples of competition analysis, we need to address the most rewarding part of using FBA rather than merchant fulfilling our products, and thus why merchant offers are largely irrelevant and disregarded by us. A merchant offer must be significantly cheaper price for a product to get the buy box over an FBA offer. It generally functions somewhere between 5 and 10%. Therefore, we realize that we can price this much higher than merchant offers and still retain all of the buy box sales. If the current buy box offer is an FBA seller, the offer will say sold by company X and fulfilled by Amazon. In the instance that the offer is merchant fulfilled, the offer will say ships from and sold by company X. In this example, we have a Peroni etched signature Italian beer glass set of 2. Now, as you can see, the buy box offer says ships from and sold by Aloha Pints and Mort. Therefore, it is a merchant fulfilled offer. When we are first examining a product and see there is no FBA offer in the buy box, it is very exciting. So let's examine further. Right here, 4 new from $23.99 is where you click to see all the offers for this particular product. So we do that, and we see this screen. Now we are looking at all the other sellers for this product and their offers. The first thing we notice is that there are currently no FBA offers, as they would otherwise be denoted with a prime free shipping offer. This bodes very well for us. As being the only FBA seller, our only competitive FBA offer would effectively allow us to dominate the buy box and gain the lion's share of the sales. An interesting bit of information to notice is that these sellers have a low number of ratings. Having a low number of ratings indicate that they are either new sellers or low volume sellers and are unlikely to be able to compete with a high volume seller. Now, this example is pretty cut and dry. There are 4 sellers for this product, and we can deem them all irrelevant. If we came in with an FBA offer, we could expect to have the buy box nearly 100% of the time against these sellers, as long as our price isn't significantly higher. And that's due to the priority Amazon places on FBA sellers. Knowing this, I would set my initial price for this product at $35. However, if that price didn't give me 100% control of the buy box, I would incrementally lower my price until I did gain total control of the product. All in all, this product looks like a winner from a competition standpoint and is prime pickings with no FBA offers. If you look at our sales rank chart from the last video, you will notice this product is just outside our recommended range, even considering we would control 100% of the buy box. But knowing a sales rank will rise quite nicely when introducing an FBA offer to a product that had only been available via merchant, this product would meet our sales rank and competition requirements. Next, we have a Quest Nutrition Variety Pack. Let's examine this product's sales rank, which is currently 109. That tells us that this product is well within our sales rank range. We use a program called Jungle Scout to estimate the sales per month for products, and it says that this item sells approximately 2,000 times each month. Let's look at this product a bit more closely from the competition aspect to see if it's a product that we should consider carrying. As we notice, there are 23 sellers carrying this product. Now let's look to see how many are relevant and competitive sellers. The current lowest FBA price for this product is $27.20. Analyzing competition with other FBA sellers is quite different from merchant sellers. We no longer have the luxury of Amazon preferential treatment, allowing us to take the buy box away from merchant competitors while being up to 10% higher in price. To compete against other FBA sellers, your price needs to be within 2% of the lowest FBA price to be eligible to be in the buy box. If you're outside of that range, you will never get a sale. We take $27.20, which is the lowest FBA offer, and multiply that by 1.02, which represents 2% higher than the lowest price, and that returns $27.74. This means anyone priced beyond $27.74 we will consider to be irrelevant and non-competitive sellers. At the time of this video, I found 11 FBA sellers selling the product within this 2% price range. Assuming that we would be the 12th FBA seller, we can visualize this product in pie chart form. So, 2,000 sales per month divided by 12 relevant sellers equals just over 166 units per month, which is well inside our range. This is another product that would meet our sales rank and competition requirements. Now, this calculation on the pie chart sales assumes that all things are equal and each seller will get 1/12 of the sales of this product. But as our buy box module teaches, all things are not equal. Our buy box module shares strategies and tactics to get an even more equitable share of sales. We have done all the analysis we can at this point. We know our target volume and competition levels are in line with where we want to be. From here, it simply becomes a question of profit margin and return on investment, which are covered in the profit margin expectations module of this course. If that aspect also lines up, we will proceed with ordering and start selling this product immediately. Now we have a Qzx dice game. This product has a 1,760 sales rank in toys and games, which is well within our range. Jungle Scout suggests that this product sells approximately 585 times each month. Next, we examine our competition. As you can see, there are 89 sellers who offer this product. Further, we only need to look at the sellers that are competing for the buy box. The lowest FBA price is $13.95, which also is a qualifying buy box price. With that knowledge, we apply our 2% addition to see where we can start discounting irrelevant sellers. $13.95 times 1.02 equals $14.23. All sellers selling FBA at a price higher than $14.23 will be considered irrelevant. As it stands, I found there are currently 30 relevant sellers, meaning when we jump in, there will be 31 relevant sellers. 585 sales per month divided by 31 sellers means we could expect to sell just over 18 of this product each month. Despite having the necessary sales based on the rank, our competition analysis shows that the quantity of buy box splits between 31 sellers make this product one that we should avoid based on our previously noted criteria of 90 sales per month. Reiterating the important concepts of competition analysis. 1. Determine if your competition is FBA or merchant fulfilled. If you are the only FBA seller, you can expect to dominate the buy box. If there are very few FBA sellers, you can expect to share the buy box with those sellers, assuming that their price is within the competitive range. 2. Identify aggressive repricing mega sellers. Monitor the pricing habits of any seller that seems to be aggressively pricing a product low and avoid them when possible, as they will drive the margins out of your products. 3. Properly determine the number of relevant sellers that are eligible for the buy box. The more relevant sellers there are for a product, the fewer sales you will be able to attain. With that in mind, the number of competitors you are willing to accept should directly correlate to the sales rank of the product. The converse of that rings true as well. Finally, and perhaps most important of all, avoid going head-to-head against Amazon. Heed my advice here. It is very hard to make any money with a product that Amazon carries. When sourcing products, you are looking for a good sales rank and low competition. When a product has both of these things, you capitalize. As you gain more experience, these processes will start to become second nature for you, and finding applicable products will become easy.
This video is going to be about defining your product range. In a nutshell, your product range is the different types of products that you will be able to carry and the plan you use for your wholesale business. There are numerous factors involved, and we are going to take a look at some of them and how you can combine them to make the best business decisions and product sourcing decisions as you move forward. Here we have a list of major outside influences that impact your product range. First is available capital. Obviously, the amount of money that you have available to you should directly influence the types of products you should be buying. As a general rule of thumb, the tighter your capital and budgets are, the faster you will want products to be turning over. So look at the fastest selling items when you have limited capital. Conversely, when you have more capital to work with, it also influences what you do differently. You can take more risks and go for bigger wins, broaden the types of products you're willing to accept, and most importantly of all, you'll be able to make larger purchases with vendors and manufacturers that result in very significant price breaks. These price breaks can increase your margins and improve your ability to compete in the marketplace. Next, we want to consider your business overhead. These are the costs that are associated with doing business, from shipping supplies to Amazon fees and so on. You need to closely monitor all expenses to help determine the margins your business will need to operate effectively. Our third point of consideration will be your business growth goals. The old adage is true. Sometimes you have to spend money to make money. You need to be prepared to scale your business and invest in yourself if you want to really succeed at a high level. If you think you need to rent a warehouse or a storage unit to keep growing your business, or if you need to hire employees to keep up with product processing, you should strongly consider doing these things when the time comes. We have found that being hesitant when it is time to scale and grow is the same thing as throwing money away. You should also be trying to invest as much money back into the business as possible for optimal growth. For a long time, we paid ourselves the absolute bare minimum so we could continually, exponentially grow our business. Another way to really scale your business is to apply for credit and business loans as you grow and become more experienced. It's really important to note that you need to be financially responsible to consider this option. Now let's take a look at the primary factors that help us determine our product range and ultimately help us make our decision for what products that we carry. Number one is sales rank analysis. We have talked about this extensively in other videos, but we need to be finding products with very good sales ranks because that is indicative of whether the product sells at a good rate or not. After we find a product with a strong sales rank, we need to take a look at the competition using all the points we highlighted in the competition analysis video. If a product checks out with both sales rank and competition analysis, we try to make a call to the vendor or manufacturer to find out what our price will be. This will help us determine if our margin for the product will work. If the product's margin is around 15% or better, we usually will decide to carry the product. At lower profit margins, we're going to look for opportunities to increase our profits on the product through maybe multi-packs or additional discounts from our suppliers. Also, remember that we like to do a small test order on a product to ensure that it's viable and that there are no hidden processing costs such as bagging, bubble wrapping, or other things. We aren't worried about the product being profitable on a test order. Breaking even is just fine, or even losing a marginal amount of money can be fine as well. The purpose is to simply make sure that the product sells at the rate we predict. If it does, we will make a larger order to incur the deeper quantity related discounts to create a real profit margin. In wholesale, we're looking to play the long game and fish for replenishable profits. There will be times that a manufacturer or vendor will not let you carry a single one of their products. There may be instances where they require you to carry multiple products, and some of those products may have little or no profit. just so we could carry the extremely profitable one. When these situations arise, you need to analyze them thoroughly and make a clear and logical decision. The last thing I want to leave you with is a little word of advice. In a wholesale-based business, you cannot be afraid to lose money and take chances. This is the biggest mistake that we see others make. When you're dealing with replenishable wholesale products, there's typically very little risk. Sometimes you might have to take a 5, 10, or 15% loss on a SKU, but it's never going to be something that will break you. You simply need to take these small bumps in the road in stride, learn from them, and move on. You also need to recognize when it's time for your business to scale. Doing simple things like hiring part-time help when you're ready is enough to grow your business to another level.
Hi, my name is Dylan, and I am one of Dan and Eric's employees. I will be going over with you our pre-contact sales spreadsheet. We will cover what it is, how we use it, and how to set one up yourself. Below this video, we actually have one already created and available for download if you have a program such as Microsoft Excel already installed on your computer. But if you don't, we're going to show you how to make your own for free using Google Docs. We use this spreadsheet as we are going through the sourcing process to keep track of the good products that we find so that we can continue sourcing uninterrupted. We can then reference the spreadsheet at any time when we are ready to start contacting companies. It also serves as a great way for us to keep up with how we have tried to contact a company so that we can seek alternative methods if they have not responded to us. Now in this video, we are just going to show you how to set up the spreadsheet and talk about a few of the fields. In the next video, we go over our sourcing strategy in real time, and we use the spreadsheet in that video, so that is where you will learn to use it. To create your own spreadsheet using Google Docs, you will need to have a Google account. And if you do, just navigate to Google and click the menu here. You may have to select the More option to see all the features, but we're looking for the one that says Docs right here. So we'll go ahead and click that, which loads up the Docs interface. From here, we want to select this menu button right here and choose Sheets, as in Spreadsheets. Once here, you can create a spreadsheet by clicking this plus button right here at the bottom right. You can go ahead and name your spreadsheet whatever you would like right here. The fields that we fill out our spreadsheet with are as follows. So first, the ASIN number. Second, the company name of the product we're looking at. Third is the FBA low price, and that is the lowest price on an FBA offer. We are not interested in merchant fulfilled offers, so just keep that in mind. We want to list the sales rank here, the company's contact info, okay, and we can go ahead and make this a little bit wider. We want to have a column for the date that we contacted the company, and also the method that we used to contact them. It's really easy as that, and again, in the next video we go over how to fill all this out as we source. Here in Google Docs, everything saves automatically, so you don't actually have to save this document. So when you're finished, all you have to do is just click this home button right here, and it takes you back to the spreadsheets interface. A cool thing about using Google as a means for these spreadsheets is that you can also collaborate on them and share these documents with other people, such as your employees or other people that you run your business with in real time. Doing this is real simple. So from here, if we go ahead and click the menu button over here again, we can select Drive, And on this list will be all your Google Docs, and you can just right-click the document and choose Share, and you just put the email address of the person that you want to be able to collaborate on this document with you so they can make changes or add things as you work on it. But alright, so that's it, and I'll see you in the next video. Greetings, my name is Dylan, and I am one of Dan and Eric's employees. I work here to source products on Amazon using the leaf sourcing strategy that Dan and Eric developed. They taught me how to use this sourcing strategy, and now I'm going to teach it to you. As we go through this leaf sourcing demo, we will be using all the important factors such as sales rank and competition analysis as we source. So let's start out by going over what leaf sourcing is and how it got its name. When you leaf source, how you start out is by navigating to the listing of a very good product that you already sell on Amazon or a product that has a very good sales rank. This product that you start out on is called your tree. It is the root of your search. It will lead us to new products, oftentimes similar ones that also rank well. These are the leaves. So let's go ahead and get started. This product we are looking at here will be our tree. It is not a product we currently carry. I just went and picked a product with a great sales rank to start off. Since we don't carry this product, we will analyze it first. So we have the 160 pieces, reflections, heavyweight, plastic silverware, forks, spoons, and knives. So the first thing that we look for right away is to see if this product is carried by Amazon. So we can see that it doesn't appear to be. It's carried by someone called Zap It Deals here in the buy box. We look over on the other sellers in the buy box. Don't see Amazon listed here as either. So that's the first good sign. Alright, so second off, let's look at the sales rank for this product. So we'll scroll down and we will see that it is currently ranked 99 in kitchen and dining. So that is a very high sales rank for that particular category. That you can probably expect at a 99 sales rank in kitchen and dining that this product sells hundreds of times every single day. So this product certainly meets our criteria for sales rank. So let's scroll back up and now we'll take a look at the competition for the product. And right off the bat we'll see there are probably quite a few competitors because right here it shows us there are 36 offers essentially for this product. So we'll go ahead and click that to go to the next page to actually take a look at all these different offers. So we'll scroll down. So what we notice is that we have a lot of prime offers on this product. I mean, just here that we're looking at 1, 2, 3, 4. The first 5 offers are all prime offers. We can tell by the little prime symbol here. That just means that these are companies that use FBA. In those first 5 offers, their prices are all relatively competitive or very close. As we scroll down, we see more offers and more prime offers, and the price stays pretty close, but it starts to differentiate a little bit here. And we can go to the next page to see if there continues to be competitive prices and prime offers. And so we see that there are a couple more prime offers, and these prices are a little bit higher than the guys on the first page. And then we can see that it kind of tails off, and then it just becomes what's probably going to be a couple more pages worth of non-FBA offers or non-prime offers, just looking at how that tampers off there. So because we typically only care about FBA offers and prime offers, those are only real competitors on any listing typically, we've analyzed that there are roughly between 8 and 10 real legitimate competitors on this listing. Now remember I said that this had a 99 sales rank, and that would mean essentially that the product sells hundreds of times a day. And so since our goal is to try to sell between 3 and 5 products every day as a minimum, we can kind of do a little math there with that. So let's just be a little conservative. Let's say that this product sells 100 times a day. So if it sells 100 times a day, if you have control of the buy box, just for 5% of those buys, you sold 5 items. So that gives you a pretty good idea of how many products you can be selling a day, even with that much competition, because the velocity, because the sales rank is so good for this product. So this is probably one that would be decent for consideration. So you could go ahead and add all the information to your pre-contact spreadsheet, which we'll go ahead and do now, and then contact this manufacturer and try to figure out what your margins would be now that you have all the other information. You have a general idea of how many you'll sell, you have a general idea of how many competitors you have, and so just finding out the price is the next thing. So we'll get their contact information, get a hold of them, and see what you can get the product for, and then determine your margins thereafter, and that's when you'll know if this is going to be a product that you'll carry or not. So let's go ahead and hit the back button here, get back to the product, and we'll grab all the information down and put it into our pre-contact spreadsheet. Alright, so the first thing we'll want to do is go ahead and grab the ASIN, which you can find down here in product details. So we'll copy that ASIN, pull up our spreadsheet, and just paste it in. Okay, and I remembered that the sales rank we said was 99, so I'll go ahead and hit 99 in there. Very good sales rank. And we can even edit that to include the category if we wanted to. So we could put kitchen and dining. So let's get the company name and the low price now. So the low price seems to be $14.75, looks like. So we'll add that. Alright, for company name, looks like Reflections. But I can also see when I go ahead and zoom in on the product here, that's the brand name is Reflections, but it seems to probably be made by another company, a larger company called WNA. So we'll put both of those down just to be safe. So we'll put both. We'll put Reflections or WNA. So now we'll go back and start looking for more products. The rest of these fields we will fill out as we continue to get a larger base of products. Usually when we get somewhere around 10 or 15 products is when we'll come back to this and actually start contacting companies, figuring out ways to contact them and filling out the rest of these areas. So we'll do that in a bit. So we've got our first product out of the way, and now it's time to start looking at the leaves. So you find the leaves by scrolling down here and looking at the area that says customers who bought this item also bought. So this is where we will find those products that are typically going to be similar and typically going to have good sales ranks as well. So what we are going to do is open up each of those products in a new tab to make it easier. So you can do that just by holding Control and clicking each of them, or just clicking them with your mouse wheel button. Let's go ahead and do that. So we'll this one, just going to do all of them here, and we'll just go through each and every one of these to see if they're viable. Here we have the WNA Masterpiece Crystal Cut Party Tumblers. Okay, so just some plastic cups. The price point again seems kind of decent, for around $17.50. Only 15 sellers on this one. It's not carried by Amazon, it doesn't appear to be. We'll scroll down and look at the sales rank. Alright, so a pretty good sales rank, very good, 527 in kitchen and dining. And it will appear to be with fewer sellers too than the last one we just looked at. So 15 sellers, let's go ahead and click that. And check out how many prime offers that we have for this product. There are 1, 2, 3, 4, 5, and then the rest are merchant. Oh, so actually 6, 7, 8 prime offers. And the next page, okay, this is all merchants here. So we have about 8 prime offers, and their prices are relatively competitive, but actually these guys down here are a full $1 or more off of the price, so they may not be super relevant. They might not be keeping up with their prices so much. But we can also see an interesting point here that you can look at from time to time is to see that a couple of the sellers, these prime offers, are out of stock. So we see this guy's back ordered, out of stock. This guy's back ordered, out of stock. So there's actually even fewer competitors right now than there would be normally, because there are guys out of stock. Now that can mean a lot of things. That can mean that this product is just selling so well that it's just running people out of stock, and that's typically a good thing. And then when your competitors run out of stock, okay, you are able to get the buy box more often because it just reduces the amount of competitors you have. So this product actually looks like it's very good if the margins are right. So if the margins are decent, this one seems like it could be awesome. You could be able to run through a lot of this product at the sales rank that it has and how few competitors there actually are. We're only looking at about 6 real competitors. I'll go ahead and add this one to our spreadsheet. Okay, so we skipped ahead a little bit here, so I went ahead and filled that information in for this product. It looked pretty good. And you'll see the last 2 products we actually looked at appear to be made by the same company, this WNA company, and that could come into play here in a little bit. If we keep seeing more and more products by that WNA company, we'll just investigate their whole catalog of products and see how many profitable ones we can find from them. They could be a real good manufacturer for us. On to our next product that we had in the leaves that we opened up, and so we have the Blue Sky 100 count disposable plastic plates. And then you can see, boom, sold by Amazon, so probably going to want to avoid this one. Already too many signs that we don't want this product, so we'll just move ahead. And right into another masterpiece product. I can't believe it's plastic, 50 pieces plate set. We see a strong price point, about $25. Doesn't appear to currently be picked up by Amazon. And so we'll check out the sales rank next. So a pretty strong sales rank, so close to 2,000, about 1,900. And remember, our total range for kitchen and dining is, we like to keep it around 5,000. So this is well under 5,000, so that's good. And then we'll check out the competitors and see, first of all, right away you see only 9 competitors, all right? So that's typically going to be pretty good, especially if not all of those are prime offers or FBA offers. So as the page loads here, okay, so we'll be able to look and see. We got 1, 2, 3, 4. Oh wow! So only 4 prime offers on this product at about a 1,900 sales rank, and 2 of them are way off base on their price compared to the other 2, more competitive prices. So that looks like that we really only have 2 real competitors here for this particular product. So that would be great at a 1,900 sales rank. So this is one that seems like it could be really attractive and we want to put on our sheet. So we'll go ahead and do that. Okay, so I skipped ahead again and went ahead and added that information for that product, and you can see it was yet again another masterpiece or WNA product. And usually when you're leaf sourcing, you see that from time to time. You'll end up just running into a whole bunch of the same manufacturer over and over, which isn't necessarily a bad thing. And so now we'll move on to our next product. So that was the one we were on. Move on. Okay, so the Party Essentials hard plastic 9-ounce party cups. This one is sold by Amazon. Again, that's one that we probably want to avoid. Don't like to sell products with Amazon, so we'll just go ahead and exit it, move on to the next. Here we have another Reflections product. This is a heavyweight, looks like silver disposable flatware. And we see a strong price point, about $22. It doesn't appear to be sold by Amazon. We'll check the sales rank out, see if it looks good. It does, 1,600 in kitchen and dining, which is a strong sales rank that we like. All right, so then we'll do some competition analysis. So we'll go ahead and click here to view the other sellers. And we have, let's see, so 1, 2, 3, 4 prime offers, and then a couple more down here, 5, 6 total. Just go ahead and look at the next page to be sure. And no prime offers on the second page, all merchant fulfilled offers there. That tells us that this is probably a product with a competition that we can likely handle or deal with, as long as the price that we can get from this manufacturer is good. But something really cool here that we need to pay attention to, again, that you can see, is that a lot of these prime offers, our main competitors, are sold out currently. And so So one sold out here, one sold out here, one sold out here. So that could be a really good sign for us, again, on this product, that it sells quickly, that other people go out of stock, so we'll get the buy box and we'll sell through a lot of products. So if the margin is good, this could be a really good product. So this is another one that we would want to add to our spreadsheet and contact the company about carrying if we can. All right, again, like last time, I skipped ahead and went ahead and added this in for us into our spreadsheet. So we'll move on to the next product. So we're finding a lot of good products actually on this little run. That's pretty funny. I don't think you usually have this high of a success rate, just one good product after another. So this was a good example for us. We move on to another WNA product, crystal heavyweight clear plastic plates. Okay, so a cool price point, about $20, $19. And it doesn't show us the buy box isn't controlled by Amazon. Only 5 competitors, it would appear. We never pay attention to used competitors. That's not something we're interested in, or doesn't matter or affect us. So if it has a good sales rank, this could be an awesome product. So 3,000 is decent. That's good. That's in our range. But if we scroll up, we see something unusual right here. In the other sellers box, it shows Amazon as a seller for this product, but when you highlight it, it shows that they are temporarily out of stock. This is a little trick that Amazon tends to use time to time, where they show up on a listing where they're not even carrying any of the product in their inventory. We speculate that they do this to trick repricers to try to keep prices down on certain products. What you should do if you see something like this is further investigate. You should search this product in a program like PriceZombie.com to see when and if Amazon has carried the product in the past. Now this product meets all of our criteria. Great sales rank, very few competitors. So if we did our research and we found that Amazon does in fact not carry this product, I would add it to our sales spreadsheet. So we can go ahead and write this one down as good pending investigation. And so this next product, the Party Essentials Hard Plastic 9-ounce Party Cup, this one I can say it's probably pretty safe to avoid it. Obviously it's sold by Amazon and that's the main reason, but the other reason is that the price point is so low, $6.18. So let's say Amazon wasn't carrying it and it was just another company at a price like $6.18. The margins, the real margin would be so low there that it probably wouldn't really be worth carrying, or wouldn't be worth investigating too closely because of all the different Amazon fees and things, and then the price of the product. So with things so cheap, not a good idea to look at them typically. That takes us through that first wave of products, and we go back to our original tree product here. And so we went through that whole first set, and you see there'll be 13 sets for this particular product. So we just hit the arrow to continue and get a fully refreshed myriad of products to go through again. And we just repeat that same process, open all these up in new tabs and go through them until we have a spreadsheet with about 10 or 15 really good products. So now I think you have probably a pretty good grasp of how we go through and source using leaf sourcing. And we'll go ahead and open up our spreadsheet. So let's just go ahead and pretend that we had 10 or 15 products that we went through here. Now it's time to start contacting the companies. Well, in this case, it's going to be pretty easy for what we have here in this scenario, because it would appear that every one of the products that we highlighted they all come from the same manufacturer. So we'll just be able to contact the manufacturer one time about all these products, making it real easy for us. So how do we find them? Well, we just do a simple Google search. Here we are on Google, and we'll just do a Google search for that. It will look like the parent company, so that was just WNA. So we'll just start there, and boom, first thing right off the top is WNA Upscale Disposable Products. So that looks like them. So we'll go ahead and click there to check out their website. We can see, we'll usually look for their contact us information or anything that they have written on the website. So right up here at the top, you can see they have a contact us and a phone number. It appears to be a phone number, so we'll write that phone number down into our spreadsheet. Go ahead and click this contact us form, and you can see that it has a contact us form that even seems tailored towards sellers or distributors or third-party businesses like us. So we would fill this out and make sure to be as clear and concise and all the information that we were trying to convey as possible, and submit that and add that to our sheet. So we would go ahead and add just use because it's the same company for each one of these. So go ahead and put that web address in there for company contact info so that we know how to get a hold of them in the future if we need to ever again, or when we're prepared. If we're not contacting them now, if we're contacting them here in a little bit or the next few days or whatever. And now we would put in the date that we contacted the company, which would just be today, and then the contact method that we insert. We're doing this just so that we know, when we can review this spreadsheet, we know how we contacted the company originally, so that we can see if maybe one method didn't work, they didn't answer us or get back to us via email, for instance. We would know that. We would list that as our contact method, so then we could try to contact them via phone or something to that nature. So in this case, we'll just put email. We'll say that we didn't call them. We just emailed them in this scenario. And so now we'll be able to come back to this and know if they never email us back, then we'll just try calling them instead. Another thing, when you have your sheet completed and you're about to start doing calls to manufacturers, you also want to run all these products through Camel to see if they have been carried by Amazon before in the past, or if they're commonly carried by Amazon. That can affect if you want to actually pick up this product, because it would be pretty bad if you made a large order and then Amazon got on it, and it becomes really hard to compete with them, and then you're just holding inventory waiting for them to sell out effectively. And this concludes our simple yet effective process for sourcing products called leaf sourcing.
This video is going to be about another type of sourcing technique that we utilize in our own business. We refer to this internally as competitor tracking. And what we're actually doing whenever we're doing this is we realized whenever we were carrying our products that we would see the same sellers on a good portion of the products that we carry. And what that told us was that certain competitors have a similar product range as to what we're targeting. Now, our goal is to ultimately find more products for our own business. So we tend to track those competitors over time, and if they're on more products or any new products, we're going to see if we can contact those and set those up as accounts if they're interesting. And this allows us to increase our product range at a more exponential rate as we're able to utilize the sourcing of other companies. It's important to note that whenever you start with competitor tracking, you're going to want to identify competitors that aren't hyper aggressive with pricing and won't beat all the profit out of your products. Like, what's the point in tracking a product and finding a new product if this particular competitor is just going to make it unprofitable? So we tend to focus on competitors that have very similar ranges in terms of sales rank, competition, and profit margin that we tend to target. And it just gives us another avenue for finding products. So we're going to use this guy as an example, Corridor. And one thing you're going to notice is he carries a lot of products. You're talking 2,300 products. And that's certainly a good amount he also has an incredible amount of feedback, so this seller's been a long time seller. But Corridor is just an example to give you an idea of about how to do this. Now, it's also important to note that competitors can change their names over time, and so what do you do in this instance? If let's say we search for Corridor and his Amazon store is no longer here, it's he's changed the name to something else. Well, first you're going to become pretty familiar with their with the products that they carry. So that's one way to identify them. And now another more foolproof way is simply looking at this code right here. This is a Amazon merchant ID, and it's unique to this seller regardless of what their name is. So whenever we start our competitor tracking sheet, well, like I said, we do this on Google Documents. We're going to enter the competitor ID as well as the competitor's name. So let's go ahead and copy this, and we're going to competitor Amazon ID. We're going to enter right here, and then competitor name. We're going to do this. Now, what this is going to do is, if we want to find this seller, we're going to be able to do a quick Google search and quickly arrive at their storefront. So, for example, let's go ahead and search for Corridor Amazon. And now we see that Corridor is in fact here at Amazon. If you notice, now we can go back to our sheet here and grab his competitor, his Amazon ID. We could also search for him this way, and voila, you're going to see the same information. Now, if he changes his name to wholesale discounts, it's just going to say wholesale discounts at Amazon when you search with that competitor ID. So that's going to give you a pretty foolproof method in terms of tracking a specific competitor over time. Now, what we do with this information is, like I said, we're going to mine their inventory and look for opportunities of products that we would want to carry, as well as potentially products to avoid. Also, that's going to give us more opportunities to create new leafs of products. Like I said, we heavily utilize leaf searching. So whenever we find a product that we weren't already carrying, that's going to set up a whole new cluster of products that we may find based on that one particular product. So this is simply something you can add to your repertoire, and gives you an idea about how much more information is possible to get. You're going to be able to find new SKUs. You're going to be able to find different types of products. And ultimately, if you're doing the right type of competitor tracking, you're going to find product. A lot. Like I said, a lot of competitors are going to carry products that are well within your own product range. As we have mentioned in this course, our strategy does not rely on trade shows, nor does it truly utilize them. However, if you are like us, then you will at some point think that trade shows are an excellent means to an end. While it did not work out for us, and that I would not go out of my way to attend a trade show unless it was in a place I truly wanted to be at, we have learned some things that will help you make your experience more enjoyable and fruitful. There are many things that you need to go over prior to going to a live show. Check the show dates, then check them again, and make sure you are on the current year. Oftentimes with these events, you will see an archived copy, and it will show you the previous year's show schedule. Make sure that you make your travel plans with the current schedule. Look for travel accommodations and hotel accommodations that put you in a comfortable distance from the event. Look at your hotel in relation to where the event is held and make sure that something you are comfortable with. For example, when we stay in Las Vegas, we always try to stay on a property that is near the monorail, as this allows you to stay at a hotel you like, as well as have a quick and easy access to the convention center without a fortune in cab fares. You should look at the weather and see what the weather is, and plan your outfits accordingly. For example, at New York Toy Fair, you would want to make sure that you have waterproof shoes in case there was a heavy snow. In terms of how you should dress, you should look to dress business casual with something comfortable but also professional. Pay attention to your shoes. Make sure that you are comfortable, as these events are held in large convention centers and require a lot of walking. For example, do not wear high heels to this event. Your body will hate you for it. This may not seem important, but look at packing some type of snacks like a Cliff Bar or a healthy snack bar. Sometimes food is really far away and you will be incredibly busy. It's best to make sure that you will have something to eat to keep your energy up. Remember, with face-to-face interaction, you want to be the best you that you can be. You should pack business cards and resale certificates. While many companies will not ask for the resale certificate, they can delay your order afterwards when they return home to their home offices. It's best to simply give it to them there, and hopefully this might expedite you in any orders that you place. Lastly, think about the fact that you will be walking a lot. Check the show rules and guidelines and see if they allow for small rolling bags. If they do, I would suggest using one of these. Otherwise, look for an alternative means to carry any material that you pick up, as well as your business cards and resale certificates. It's important to note that some shows do not allow rolling bags, so verify this prior to going to the event. This is probably the most important thing that you can do to have a successful event. It is critical that you research who will be there and what they sell. It's best if you can go to the event knowing what you are looking for and simply use the event to create a face-to-face interaction and try to work on any discounts. So try to find out which wholesalers will be at an event. Simply go to those event main page and look for exhibitors. This should take you to a list of companies that will be set up as exhibitors for the event. We like to do as much research as possible and try to find out who we should specifically seek out at the event and hopefully work on deals with. Our goals at the event are working on discounts as well as working on setting up accounts with companies who might have turned us down in the past. We truly feel like a face-to-face interaction can play a major role here and is the primary value for us even attending a show. As always, we tend to steer clear of general wholesalers as we try to focus on targeted brands. We don't like going through endless catalogs to find that diamond in the rough. Instead, we want to focus on finding good, replenishable products. However, if you are able to get your meetings out of the way with targeted brands that you sought out, you may want to spend a day talking to these wholesalers and seeing what products might work for you. The point here is that your pregame is every bit as important as the actual event. You want to approach the targeted brands and products with confidence and have information about their products, and be able to have an educated conversation with them. They will remember that much more than they will remember an order. Here are some of the things that we tend to research with targeted brands. Products. What do they do and who do they appeal to? And how can you tie them in with your customer base? Who carries their products? What can you do differently? What is their company mission and what do they actively promote or care about? What is their customer profile? You don't have to answer all of these, but you should understand that you should try to find answers to them. You should learn about their company, their products, and their customers. After all of our research, we finally have made it to the big show. There are certain things that will make your life easier here, and we want to point those out to you. The first and most important thing is to make sure you get up early enough to eat a good breakfast. Look for filling foods that do not give you a sugar high, as lunch can be hard to come by at some locations. You don't want to be out of energy midday because of a sugar crash. So focus each day on having time to eat a healthy and nutritious breakfast. After that, when you go to registration, make sure you have any documentation you need at the ready. This will help processing time be minimal. It's important that you get a map of the convention center so that you can focus on finding the people that you need to talk to. This is super important because many of these shows span over massive halls, floors, and even buildings. So finding the right companies can be extremely difficult if you do not have a planned route and have a destination in mind. I want you to take a second and pause and open the Approaching Trade Show Vendors PDF below. There is a lot of information that I'm going to cover that I want you to be able to follow along with. This is the reason you came. The most important thing is to be confident in yourself. We generally start off the conversation by introducing ourselves and asking how their show is going, or if it is extremely early in the event, how their travel was. We tell them a bit about our company, for example, how long we've been in business, where we're located, and what we sell. Then we will mention something specific about their brand and ask them a brand-specific question. Don't focus on where you sell the products. Instead, show the genuine interest in their company and brand. By all means, if they ask you where you sell products, tell them, but make sure you control the conversation and direct the focus where you want it to be. It's important to remember, with any event, you don't have to place an order on the spot. Instead, find out the necessary information. Number 1, what is their wholesale pricing? Number 2, do they have any show specials? Number 3, what are their FFA or free freight thresholds? Number 4, any volume discounts? If so, what level? Number 5, are there any restrictions with selling their products? Number 6, do they have MAP pricing? If so, are people actually adhering to it? Number 7, if people aren't adhering to their MAP pricing, what enforcement strategies do they have? Request a catalog and simply tell them that you'll be back to talk to them if you aren't comfortable placing an order without doing more research. If you are comfortable with their answers, the pricing, and other necessary factors, place an order. but don't let them dictate you placing an order. In terms of how they answer those initial questions, note that whenever you are reviewing their material. For example, if they said they don't do any volume discounts, then look at their minimum order. Find the maximum amount of product that you would be comfortable ordering. If it is significantly more than the minimum order, for example, a $250 minimum, but your order would be $2,500, then propose that order to them the next day and look for a discount. It's important to remember that whether we are live and in color or communicating via phone or email, that we are constantly looking for discount. This never changes, ever. It's a huge part of your business and your success to find discounts and create margins. Don't let face-to-face interaction prevent you from doing that. If you choose to go talk with general wholesalers, it is important to remember that you do control the conversation. For example, many will be pushy and ask you if they can help you or what you are looking at. It's best to tell them that you are looking around and will talk to them in a bit. We typically identify 3 to 5 items and ask about pricing. If the pricing is close to where we would need it to be, then we will generally run through the same questions as before. Example, volume discounts, free thresholds for freight. If those prices aren't close to what we need, we'll generally thank them and move along. There are several other important questions for general wholesalers if you find an item that you're interested in. Number 1, is this a closeout? If yes, we like to ask them how many pieces of the closeout were there and what percentage that they got. Also, when was the item closed out? This is very important. Large closeouts tend to tank prices really hard, so look out. We generally avoid closeouts with more than 2,000 total pieces unless other information would sway our decision. Also, you can ask them where do the majority of their clients sell products. For example, online or brick and mortar. If the closeout was really recent, that will set off alarm bells as well, as many of the units may not have hit Amazon yet. Many of these guys are simply reps and may not tell you the truth, or even know the truth for that matter. It's important that you get as much background as possible when looking at closeout items. Number 2, is this a liquidation item? If yes, I would generally be cautioned as the conditions of these will vary. Anyone that you talk to that you feel like can have a positive impact on your business, regardless of whether you buy something or not, get their information. However, do not take arbitrary cards and don't give out your information to people you don't think will have value. They will beat down your inbox with automated emails, phone calls, etc. While I realize that you may miss a deal, the converse is that you will stop reading your emails as thoroughly as it fills daily with junk. Don't make things great that aren't. It steals your energy and your bandwidth. It's really important that when you get back, that you generally give your reps a couple of days. The majority of the times, they will reach out to you. Imagine that they got hundreds and hundreds of calls and emails to do. If they don't reach out and follow up with you, then contact them. Remind them of your conversation as well as the reason you would like to do business with them. Also send out a reminder if you placed an order, just something along the lines of, "Hi, thanks for talking to me at the show. I really appreciate you working with me at the show and it was incredible. I placed an order and make sure to tell them your order number. And just wanted to let you know to contact me directly with any updates." Please check the transcription for this video for a more plug-and-play version of this. This will simply make sure that you have your email on file as well as to let them know that you are thinking about the order. If you don't receive a timely update, for example a week, recontact them and find out what the issue is. It's important to remember that while they are busy, your order needs to be dealt with as quickly as the market can shift a lot. Work with them to make sure that your order gets out quickly. Beyond connecting with people that you met at an event, start looking through the catalogs that were interesting at the show. If you carried it around and ultimately home, then you should have done so for a reason. Don't simply accumulate firewood. Look at the products or get rid of it, as their stocks can quickly change with general wholesalers, and if they are the brand owner, review their products and make your decisions. It's important to act quickly, as shows can certainly draw a crowd to products. Don't forget to leaf source off of all of the new products that you find. Shows aren't a huge part of our business, but that doesn't mean that they aren't useful. If you choose to go to them, do everything possible to set yourself up for success.
Toys and games as a category is one of the tougher sources to find wholesale opportunities. Children generally want well-known characters and franchises manufactured by very large and established corporations. These manufacturers already have massive contracts in place with all big box retailers as well as Amazon, who aggressively compete with each other and accept thin margins and in some cases even losses in an attempt to gain market share. This makes purchasing from these manufacturers a losing proposition. With that said, wholesale opportunities do exist and can be quite lucrative, but know up front that items manufactured by Hasbro, Mattel, Spin Master, and other major toy manufacturers will not be able to be purchased for resale on Amazon. Further, non-closeout items from toy distributors manufactured by the conglomerate corporations is often a fool's errand as well. Success in wholesaling toys comes from exploring products, brands, and manufacturers that do not have the large production capacity and distribution infrastructure of the mega corporations. Finding unusual or niche products is generally key. However, simply finding one of these types of toys does not put you in the clear. It is advisable that you do product research on Camel, and Price Zombie to see if Amazon has ever carried that product in the past, because you will often find that there are several smaller brands that Amazon has and does restock, and there is absolutely no future in competing with Amazon. This product is an easy example of major manufacturer and Amazon competition. Product is made by Hasbro, carried by Amazon, has an MSRP of $14.99, currently selling at $7.99. This all adds up to a product you don't want to be associated with. Now this product is an example of a smaller manufacturer that has a great sales rank and Amazon is currently not carrying it. However, when you do research, you can see that Amazon has consistently carried this particular product in the past, which indicates they are likely to return on the listing, and they also currently have multiple planned toys items in stock. With that information, I would definitely avoid this item. If you had made a large purchase of this product without doing your homework, you would likely be looking at suffering a significant loss by the time you were able to get the product for sale on Amazon. The point being is that like all other aspects of wholesale, you have to dig deeper and constantly be looking for niche brands. They do exist. However, they aren't going to come in the form of something that you see every day. In all likelihood, they will take some intensive research to find and be relegated to a niche, a lower price point product, or come from a company that simply refuses to deal with Amazon directly. To be successful in the toys category, you have to look beyond what you know and see every day and source from smaller manufacturers. The odd thing about this category is all of the advertising dollars spent marketing becomes the toys that you know, and we seem to forget the rules when it comes to this category and only focus on things we have seen. Beyond the fact that they are likely competing with Amazon in terms of the mega accounts and major toy brands, there's another problem that arises. These items are often produced on a pre-order status, generally months ahead of when you will receive the product. You have to understand that ordering under these scenarios is very difficult, as you don't know what the market conditions will be once the product arrives. We have moved away from that model because it's more difficult. We realize that our efforts were better spent on searching for lower competition products in more niche lines and setting up direct accounts. Dollar for dollar, if you focus on the methods we teach here and move beyond this method of sourcing for toys, you will have a far better experience with wholesale.
In this next series of videos, you are going to learn our major sourcing factors and how we bring those all together into our simple yet highly effective sourcing strategy called leaf sourcing. As you find great products, you will put them into a pre-contact spreadsheet to keep track of them, which we demonstrate in one of the modules here. After you learn our sourcing factors and learn how to leaf source yourself, we suggest you immediately start sourcing products and grow your pre-contact spreadsheet as large as you can. However, we recommend that you wait to start contacting companies until you have implemented some of our strategies for increasing approval rates that you'll learn in later modules. And as always, if you have any sourcing questions, make sure to ask us in the Facebook group.